What is up, everybody? We are going to be going over the July 2024 top ops. So as I tweeted, July was another pretty solid month, honestly, which has been the case the whole year. In my opinion, the best intraday op was in Tesla on July 11th, as far as just really being able to crush a play. And I think the best swing op was potentially an IWM, and we're going to go over why. What's really crazy is the action has been incredible since then. And so the ops I wanted to cover this month, Tesla in a couple spots, Siri in a couple spots, the Apple swing trade, Oracle headline, Hub's headline, which I had covered in a separate video, some of the CPI trades that last month, and which led to a rotational trade, swing long in IWM, then the semis we can discuss a bit more, although I have covered that a lot, and then Lumen, which ended up setting up pretty interesting in August as well. Okay, so let's dive in. First things first, let's go to Tesla. And so a couple things for context that will help set this up. I'm not certain, but I think it was on 4-5 after hours where Elon tweeted out something to the effect of, oh, Robotaxi unveil on 8-8. And the stock went up quite a bit on that. I think we went up from like 175, then the next day we were in, one low 170s or whatever. So why am I saying that? Because that's going to come into play on July 11th with what I thought was the best intraday op. And it's so important, whether you can do it in your software or any other place, even just like in Excel if you need to or something, you need to take notes on all catalysts that meaningfully move stocks the best of your ability, because that is going to come back, that little headline, and really set up an incredible play. And those details really matter, and the pro traders are so on top of the different headlines and everything else. So now let's start to dive in. Like, Tesla formed this base on the daily chart after being way oversold. I think it was earnings that ended up reversing all this. Okay, great. Then we broke out from 200 bucks. This is actually a pretty good setup. I'm really not proactive enough on going with the trend and scanning for this stuff like I used to be. I used to be very good about my stock fetcher filters. Now I try really not to trade, so I'm way more reactive than proactive these days. And that definitely costs me easy P&L. But if I was putting kind of more effort into this, this meaning the trading stuff, I'm putting a lot of effort into making good content. But if I was more actively trading, this is definitely a long setup I would consider, especially for some continuation after this really strong day on 7-1. So this in itself is an interesting swing long. And then we really get pretty carried away and pretty extended. And I want to dive into this day on 7-3. So 7-3 looks like pretty uneventful on a daily chart. Nevertheless, I actually thought there was a really good intraday short. So the context, right, is so we had a nice setup at 200. We break out. It's 1 day, 2 days. So this is the third really big day up. And now let's dive into what it looked like on 7-3. And I did toy around with TradingView, but like some of the, like, it's just such a trade-off. Like there's stuff like the tabs on TradingView is amazing. So there are some features that make things way better. Like I really love that. I wish I could do different, and I know I can do different panels, but I can't do like multiple tabs so I can have all my charts lined up at once. But then some of the zooming and other stuff is a lot more clunkier on TradingView. So I don't really know what's best. But anywho, here's the 2-minute chart of Tesla. Keep in mind that daily is really extended. Off the open, we do a really nice leg that was about 5 points or so. Call it 235-ish to 240. We really don't pull back much at all. We consolidate, we break out. This, like, I don't want to be short anything here. Like, this is more steady. It's just the first leg off the open. Yes, we're extended on the daily. We break out, and now we really start to accelerate pretty quick, and we go another 5 points really quick. And so I was actually still trading pretty actively at the start of July before I needed to focus more on the course. And so I actually shorted this for quite a bit of size, because that's now 10 points. The daily's already really extended over the last couple days, and it was such a quick symmetric leg, right? So the way I'm looking at this, 235 to 240, 240 to 245-ish. So pretty much I think this turn on break of prior bar lows, like I was starting short light, then I hit pretty heavy on that break of prior bar lows, and we don't pull back much at all, and we then turn higher. And so then I took a loss, and we start to kind of break out, but then we don't, but then we finally get that move. And really what my sweet spot where I would have gone just absolutely apeshit would have been 250. I would have loved to get 3 to get 3 legs off the open, all symmetric in a row like that. Like if we went 235-ish to 240, 240 to 245, even less consolidation, 245 to 250 in this straight line, not with these little couple bars failing there, but if we went just no consolidation, 245 to 250, I am going absolutely nuts on that thing. Like that is such a big move for the stock and no news and everything. So I would have felt so confident on that and just gone crazy. Nevertheless, I still thought this was incredibly good to start to short into this, then break of prior bar lows in here, I started to add. And so once we break the trend, even in this bar, when this bar starts to push up towards those highs, I'm actually just shorting, more in here, right? Against those highs. So I shorted a ludicrous amount of Tesla, not even, but still I would have done even more if those reasons that I discussed panned out. This ended up working pretty damn well. And so now here's the thing. It's more of an art than a science sometimes. Like, yes, we technically break prior bar highs here. And I mean, it's what, by some minimal amount? Yeah, like a couple pennies. And so here's the thing though. If this was maybe like the first leg, like if this happened, if all this action happened down here, I might be taking off into this. But when we've gone 3 legs and it's been so quick and the daily so overextended, this is a little bit too myopic to close out my position. I'm not saying I'm not scaling out of a little bit and scalping some out here, but it's just a little bit too short-sighted given that this just went from 235 to 249 in a straight line on an overextended daily. I really want to think more big picture. Like if this was a second leg, like if I'm shorting in here, I don't mind covering 241s. Like that's not a bad cover given it's only 2 legs and everything else. But when we do that third leg, I really like it feels just a little bit too myopic to be covering right here. Again, I don't have like super hard fast rules. I just know that like the more legs that occurred, 1, 2, 3, the more in favor it is for me to kind of hold this. And especially when you factor in that daily, like I really want to try to catch a more meaningful pullback. So like it's okay to scalp some into this, but I held a really good chunk into the low 240s around here. So this I don't mind covering into because now we're almost back at around where like that second leg was. It wouldn't have shocked me if this failed much harder. So I was covering a chunk. I was kind of still holding some. Once this starts to like reclaim, that's when it's like, oh no. So even though, given the daily was so extended, I actually did hold a chunk, not until all the way up here, but like once this reclaimed, I was like, ah, shit, maybe this isn't going to happen. And, I ended up covering everything by the close. So I'd say like I did very small covers here, a really good chunk in here, but I thought we could even pull back more or really collapse. What I want to see is if this is the high, that's the low, that's the lower high, that's the lower low. I don't want to see this area get broken. Once this gets broken, that downtrend pattern is done. And that's what made me think, crap, like we might just kind of like chill here. And this, keep in mind, is July 3rd. Like you might be wondering why this only went to 1 p.m. It's because this was ahead of the July 4th holiday. So yeah, it's funny because on a daily chart, if you just look at the bar of this on the daily, it looks like there wasn't some amazing op, but I actually thought this third leg intraday op, even though you can't see it on the daily, was actually really good. And again, like if that went just straight to 250, that would have been an A+ for me, like an intraday A+. I'm going absolutely wild. Nevertheless, like most people will overlook this trade, but I can't stress enough how highly I think of this pattern. Not that it was perfect, but it was very good. And for a holiday day, like, this was a super solid win for me. And that's not really even the bulk of what I wanted to talk about. So let's go back to the daily. Again, we all know the context. Broke out from 200, we start to really go. And so prior bar lows end up really holding for a long time. And if anything, this trend starts to be more price acceptance. Like this bar isn't as extended as the prior. This bar is a little bit more price acceptance as well. Even though we do break outside that range, we get a little bit more price expansion. So I'm not shorting any of these, right? Like these are two consolidation, like it's rather than price expansion, right? This is price being digested and we're still holding that trend. for me to short against the trend, I need that extension like we got on 7-3. Nevertheless, because we're holding prior bar highs so much, or sorry, prior bar lows so much, I'm still watching this trend. Now for context, the prior bar lows going into 7-11, the prior bar lows are about 258. So now we're gonna jump to the 711. Yeah, there were actually a lot of opportunities in Tesla. I'm gonna kind of spend a lot of time on this one because I think a lot of people overlook some of this stuff, but it was some really awesome stuff. Okay, so Tesla had been kind of doing its thing, almost like Head and Shoulders-esque. We start to roll over and break down. So then what happens is as we're rolling over at 260, so keep in mind, this is very extended still overall, like versus the 200 breakout, like we've covered a lot of ground. So you could see this really making a move. And as we start to roll over from 260, this is starting to crack. And then in this bar, this is when a headline comes out that the robotaxi unveil is being delayed. And so now if you have in your mental database or in your notes that Tesla had moved a good amount of percent on that initial headline that they were doing it, this isn't a full cancellation or anything super crazy, but that is a net negative headline that people were really buying up this move on and all this. So now what happens is you get what is a bearish pattern, which is different than what the trend has been, right? We're rolling over and breaking 260, and then that 258 level is key on the daily just as that headline comes out. So you're getting a daily that's aligning with an intraday that's aligning with a really net negative headline. So in this specific moment, you can just, this is just like everything aligning, mega green light, triple short, and you can catch a really, really, really nice leg in this. Like that's so many points for this to cover, like 14 points essentially. Yes, this move gets overextended, so I don't mind covering some into this, then break of prior bar highs. I'm definitely getting out of the rest. And so then like I don't love this rollover. Like it's totally okay if I miss the rest of this. You know, a lot of times like I don't necessarily always catch the full leg. I mean, really, if this set up a little bit better and it was close to the end of the day anyways, but that could have been an interesting short too. But really, so the best moment in time is really just highlighting that 258. Again, why? Because Head and Shoulders, you know, weak pattern when we had been going up. We then break the prior bar lows on the daily. We then have a negative headline. So everything is aligning that this could really crack the stock. And sure enough, it did. So that was like the best intraday moment of the month, I think. So now I want to touch on a couple things. And this is where we're going to go back to some of the daily concepts. The stock cracks hard on that headline. We then retrace super, super well. And then this bar ends up strong. Like I think this was on the Trump assassination attempt. So this was interesting because even in the overnight session, like overnight, this thing was trading at like 263 or 64 just because Elon was like, you know, backing Trump. That kind of seemed like a ludicrous move. So in the overnight, I shorted a chunk at 264. And now keep in mind, the other beauty of this is we've spoken so many times about that lower high. This was a beautiful move. We then cracked really hard. Then all of a sudden we're right back up here. This is an incredible lower high short opportunity. Overnight, I recognize that. Like I don't mind giving this to whatever these highs were, like 271. You can structure this as an intraday short where I'm just shorting overnight, and I did in fact cover a chunk pre-market, or you can set this up for a swing trade where you're shorting here against those highs and the reward is pretty much uncapped. You know, I'm sure there's people out there that might hold this real big picture and catch a really good chunk of the move. Let's also jump to the 715 because this wasn't super clean, but even with that big picture in mind, there is some interesting stuff on the intraday. Like the overnight was interesting. And let me dive into, like I discussed, you know, overnight you were able to short super, super high, even pre-market, you know, it was pulling in, but then off the open it dumps. That for me, that was enough where it's like, okay, I get that, you know, Elon's pro-Trump, but like at these points, that's not, like all the really nice juice and meat of it was over. Sure enough, we reclaimed and we started to push back up really high, even above where I think we were overnight. And so this intraday isn't that great at all. You know, this is consolidating pretty okay over here, but this is where, like, for an intraday chart, I don't want to be fighting this, but based on that daily chart that I discussed and that lower high possibility, I did short, not big size whatsoever, but I did short some of this, knowing that I don't mind giving this 5-6 points and risking big picture. And I think that's just an interesting thought for you all, because so many times in these videos, that concept of those lower high opportunities have come up, and I think it will come up again when I cover IWM. So yeah, a lot of interesting things there. I'm not going to touch Tesla anymore because this stuff really wasn't too much for me. Okay, so that's it for Tesla, and now I think that is going to bring us to good old Siri. Siri had a couple interesting things. For being such a boring ticker, Siri actually makes some decent moves over time. This starts to really spike kind of around July 4th and everything, and we're going to go to this period, and keep in mind, just big picture context, we're coming to 60, and we make a really large move. And Sirius is pretty boring, even though it does tend to, for whatever reason, give pretty good opportunities over the years. So the stock had been kind of just trending strong. You know, this is like a decent move. Like, we hold prior bar lows for a really long time. I don't mind necessarily shorting there. It's not great though, because of these little like consolidation price acceptance bars. Like, again, I really want to see price expansion and the bars really growing in size. So all of these are kind of just acceptance. It's not the end of the world if you short this, but I'm not really so surprised that it didn't go anywhere. And this is where I talk about like the nuances matter, right? And building that framework for price action and everything else, because so many people will be like, dude, I bought the right side of the V, or I shorted the right side of the V. Why am I taking 1,000 paper cuts? You're taking 1,000 paper cuts because this is a fairly price acceptance bar. These are extreme price acceptance bars. And, you know, we're not even above the upper Bollinger. We're not far from the moving average. We don't have volume capitulation anywhere. So all of those factors hurt your odds, right? It's if only it were so simple as one simple thing. That being said, now compare that intraday that we were just looking at to this. Like, yes, this bar is smaller, but overall, look how nice and clean and trendy these are. We don't have 5 little bars together, 1 up bar, 4 little bars together. The reason why I bring that up is just to say that this versus the prior day is way better. The intraday here is better, and on the daily, it's gone much further. So the daily is better than the prior day. The intraday is better than the prior day. So what happens when you short prior bar lows here? It works way better. And like, this isn't some home run trade. Like, I'm not an idiot. Like, I recognize you only make 10 cents, but like, that's like a super easy trade that you can, you know, you can make a couple $100, you can make a couple $1,000. And if you're a beginner trader and you're watching this, like, these are super replicable setups, but those nuances matter. This might seem to many just like a dumb little play, like, Lance, why are you wasting time on this? Because if you are new to trading and if you're on the beginner side of things, this is exactly the type of stuff you want to study in very high detail. You want to study why this daily on 7-5 is better than the daily on 7-3. You want to study why the intraday is better on 7-5 than 7-3. And you want to study why this like ends up being a super easy single. Like, you can see this pattern unfold. It's not super fast. Like, by no means is this super amazing, right? We don't get volume capitulation. This bar is a little bit smaller. These are a little bit smaller. But why is it that you can eke out, you know, like your 10 cents here when in the other trade, the prior day, you didn't make much money at all? You know, again, even if you short a couple thousand shares, the stock is hyper liquid, and you make your $200. For many traders out there, when I was a beginner, it was stringing together those $200 trades, those $2,000 trades, the $400 trades. That's how I built my career on the easy money trades. So that's why I'm taking the time in these monthly summaries to really hit on everything. Like, I'm covering the big money Tesla trades, I'm covering the intraday trades, I'm covering the swing trades. So I'm trying to give you guys a huge variety of different ways to trade. There isn't any right way. You can be a home run hitter, you can be a little sniper, you can scalp little trades like this. This is a super solid trade. Like, you know, don't let anyone laugh at you on this trade. And so given the big picture context as well, you can make your 10 cents, or, you know, this sets up a lower high, you know, given the extent of this move, given how extended it is on the daily. So I'm not opposed to you holding this big picture. I'm not also opposed to shorting below this little break here where it's like, okay, this is almost that head and shoulders-esque pattern. We short below here. I don't mind this entry to try to catch a bigger picture leg there. So then if you do swing something like that, these patterns are fractals, right? What I just described on that intraday kind of is interesting here, where we close weak. That was the day we just looked at, but then we gap up after that week close, and that's a pretty damn big gap. And so what this does is, if you're following along, this is kind of an interesting entry for what might end up being a lower high against those for a big picture pullback, right? Because if you short these break of prior bar lows, this isn't the worst thing ever, but it's kind of already pulled back a fair amount. Like it's already pulled back and retraced all of that. So I'm not opposed to shorting something like this and giving the, call it 15 to 20 cents against highs to catch that bigger picture move. And then maybe I get stopped out on prior bar highs there. So again, many different ways to trade this. And so it's also interesting too, is when we pull back so hard, it's not that of a much of a bad idea to short up here too against those highs as well. Because if you think about it, like that Tesla swing example where Tesla cracked so hard, then it was up there again 2 days later. So now let's make an analogy. This came right back up there too after a hard crack, but this is worse. Why is this worse? Because we did it so steadily over like 6 days. Whereas Tesla had big down day, we kind of did like a reversal day, then a big gap up. So sharply, we were right back up at those highs. So many people want that opportunity to resell up there. When we really kind of grind up there, this series is way worse than that Tesla lower high opportunity, but it's still not the worst thing to get another whack at it against those highs, because this move was just so big and sharp. Like, it does work out well, but I don't think this was some amazing trade. I think this is maybe a B. This is something where maybe, you know, you short 10,000 and risk the 15, 20 cents. No way am I going nuts on this, but I think it's important to connect the framework of why these different patterns work and how they relate to different setups over time. And then having that lens for like, why is shorting on 7-16? Why is that worse than shorting Tesla on 7-15? And you start to build this framework, and that framework comes from like studying these charts and databasing them again and again and again. And those are the type of nuances that matter so much. Those are the types of nuances that allow me to have a very high hit rate on some of this stuff, right? And it's those nuances that, oops, oh God, thank God I avoided that. It's those nuances that make the short on 7-5 intraday better than the short on 7-3. So I'm really going over these to help you all build that database and that framework and populate these with different examples. Okay, so next we have the Apple swing. Really, the main breakout was in June, so I won't spend too much time on this. I don't think it was so great. Like, sorry, the June one was so great. The June was so great, but the July wasn't so great, but I still think it's worth talking about. And that's simply that we kind of make these highs at about 220. We have this pullback here. We then start to coil where we have this higher low. Then we break through 220. Because the market was so incredibly strong back then, I don't mind doing a buy on this break and giving to those lows. It's kind of nice that the lows were so tight here, so the risk is pretty defined, and I don't mind trying to catch this potential leg. I don't think it was so great. Like, it worked out totally fine. My confidence level on this, just because we already made a pretty big move and this consolidation isn't the best, this is probably like a B trade. Nevertheless, I thought it was worth pointing out just so people start to think about these things, and that's fine. I believe next on my list is the Oracle one, and this is also going to emphasize why notes are so important. Okay, yeah, it was May 14th. We even covered this in the May Top Ops video. If you recall, on May 14th, there was a headline that Oracle is in talks with Musk's XAI to like I think it was like a $10 billion server deal or something like this. Oracle exploded on that headline. It was a really great intraday trading opportunity. It was massive volume. And so the stock really performed pretty well around that. Again, going back to taking notes, this is now 2 months later, just like how Tesla, the robotaxi headline, was many months later. What we end up getting is on this day, it was at 7-9. So what ends up happening on 7-9, so talks ended up stalling or not even just stalling, but just, Elon ended talks with Oracle because essentially Oracle said, what you're asking us to do is impossible. Elon does not like being told the word impossible. And headline comes out that those talks are over. When you have really good notes or just really good just mental memory and mental database of these things, when that headline comes out, this was a big deal that Oracle moved up a lot on. So even if you're chasing to like 142 or so, 142 is still very much probably worth it because we have such a clean data point of how much it went up before. Then using prior bar highs, where do you actually get out? I think probably by maybe a couple pennies you get out here. You don't quite hold it to there, but that's fine. Regardless, the point I'm making here is the importance of really taking good notes and having that mental database. So immediately when that headline comes out, you can connect and say, uh-oh, this is a big short for Oracle. It's going to go down a good couple percent based on my notes. And that allows you to be quick. And over time, you get lightning fast on this stuff. Not some crazy op, like the reward wasn't insane, but I still want to bring that up. So then there was this HUBS. I already did a video on this headline, which was, that M&A talks were ending for them. I already did a video. I'm not going to touch this again as a result. Please just scroll back and check that out. And what I do want to touch on is the CPI release on 7-Eleven. Actually, let's touch a couple things big picture first. We've got the Qs. The Qs we know have been super, super strong, especially for the most part in the month of July. And so this is the day. Okay, yeah, let's look at that there. So 7-Eleven is where the Qs end up down a lot, right? And we're actually I think I'm gonna end up using the futures for this. So the Qs have been dominating for quite a while, and IWM has sucked for quite a while. Like IWM has just not really gone anywhere in a really long time. And a lot of people are saying IWM and mid caps are dead and stupid and they suck. What ends up happening here is we get that data point on CPI, the Qs go up, the whole market goes up. I think kind of everything went up, like this ES popped. And even if we go to Russell didn't just pop, Russell exploded. So this is really interesting. Russell explodes and then we hold up. And Q though, the NASDAQ starts to pare back. That's really interesting now, because the Russell makes an outsized move and we're holding up. Qs start to pare back, and then the Qs make this kind of down move off the open. This roll here is very, very, very interesting, right? So the CPI counts as a catalyst for the market. It's especially a big mover for the high beta tech NASDAQ. So when you get this roll, this has a very high potential to get some continuation because the market is in play on this news catalyst, and now we're really starting to break, and it has been up a lot on the month. All of those factors really play into what makes this an interesting short. Now also, let's just go back to the IWM. I'm using RTY, but it's the same thing obviously. So this makes a leg, and while the ES and the NASDAQ are just getting shellacked, this ends up holding up really well. And then we end up like, I don't know if I'm necessarily going to trade this intraday or anything. Like maybe, like none of this is that clean. I don't love so much of any of this, but now the interesting part though, is that this ends up closing super, super, super strong. Like that is a huge move for this index. We are closing top tick, and this is all while the NASDAQ gets super, super shellacked. Looking big picture, like this is a 3-year chart. Let's go to even a 5-year chart. IWM since 2021 even has not gone anywhere. So what happens is we get this data point and we get some major sector rotation. I'm sure you guys saw some of the stats on this, but like IWM was up a huge amount. I'm just gonna pop to the IWM for now. IWM was up a huge amount that day, and the NASDAQ was down, and IWM is right by this kind of breakout area. Look at that volume, and that divergence between the indices, that is a huge signal. So I know a lot of people, not hindsight, a lot of people I know ended up buying calls or overnighting the IWM on that close because of that. And so that is a really interesting swing long, because it's about to break out. We have a news catalyst, we have some major sector rotation, and this has not gone anywhere for a really long time, and this ends up holding prior bar lows really, really well. So you catch a massive move for an index that hasn't gone anywhere. Then if you do options, it's amazing. Like think about the volatility expansion on some of these days. Okay, so all of that is great. This gets really extended though, and then you need to consider shorting. So this is the type of thing where this day 7-16, and I'll pull it up. Let me get 716 to 718. These are going to be important. shorten. So 715, there's nothing that overextended that I really want to short here, just providing that for context. Now here we are on 716. We make a really sharp move off the open. We start to pull back some. We then kind of just really grind higher. So when we're grinding higher like this, I really don't want to be fighting any of this. We're not extended enough on the daily for me to want to take this. For the most part, like it's still kind of, hey, we're just breaking out after not going anywhere for many years. Grind higher and keep going. And now that's 716. Now we're kind of really talking. Off the open, we really make a big leg. And again, keep in mind, guys, I know it doesn't seem that crazy, but this is an index of just the 2000, Russell 2000, right? Like most indices don't make moves like this, right? Like this is a 5-point move. That's 2.5% in 30 minutes. So I don't mind, given how extended we are, I don't mind taking that short at all. This is almost like that one Tesla short on that second leg. I don't mind taking the short. It's not phenomenal yet. And I don't mind getting stopped out there or getting stopped out at highs. But then what happens, right, is we go from effectively, I don't know, call it 222.50-ish. So we go about, I don't know, 2.5 points. We then fail. Then we make another 2.5 point leg or so. So this is very similar to that Tesla concept, right? Where it's like, I don't mind the stab there, but once it does that symmetric leg, I am loving this. So this is super appealing. And this is where I took a really nice short. And then we hold prior bar highs super well. Like that is an amazing leg. You can hold this big picture. You don't need to. You can just make that leg. And that's an awesome day right there, right? IWM is like infinity liquidity pretty much. And so that is an amazing trade. So then what happens is we pull back and retrace that whole move, right? Look how sharp that was. We retrace it all. And so now what's interesting is the next day we do that same thing off the open, and it's much like how that Siri bar, how we had cracked so hard the prior day, where again, I don't mind shorting here and I don't mind getting stopped out there or there, but we then do that second symmetric leg again. And once we do that second symmetric leg, I don't mind shorting there and catching that little move. But again, I'm also thinking big picture, because now the stock had cracked on the daily. So let me pull this up, right? Like this was such a big reversal. First of all, that's such a big move it made off the open. We cracked so hard. We opened below the prior bar lows on that daily. Then off that open again, right? It's just that flurry of buying. We end up pushing back towards those highs. So I'm shorting this thinking that the trend is broken. What an interesting opportunity you get again to be able to short here against those highs. This isn't that different, right, than what we had been talking about, where here is Siri that cracked kind of hard. Then this opened up there, which is okay. Like again, this series setup was decent, but what I really love is I think it's even better when IWM opens and breaks the trend and we just shoot up so quick off the open. That's almost like a gift to short something that's so likely to be that lower high against prior bar highs. And so that's where like you can catch an amazing swing trade that ends up stopping you out there. Like that's a super awesome big picture trade. And that's also why I don't want to cover the first little pullback, and I want to have some faith that this could really retrace. So I think what's so cool about this July recap is we're getting a lot of trades that have a lot of similar concepts to them. Ideally, you're watching these videos and you're databasing and taking notes at all these different categories of trades, because we've seen so many lower high opportunities at this point, right? So really big move. Now keep in mind, the news catalyst was here, right? The news catalyst was on this day. We're now 1, 2, 3, 4 days later. So should this really still be exploding like that, especially when we get such like a meh kind of indecision bar there? Like, yes, we went up, but we didn't close strong. So should someone really be spraying at 222 up to 226.50, you know, when you could have bought like 5% lower a couple days ago when nothing has changed? It was just this one CPI day 4 days ago. So that's what makes all of this price action in here so interesting. I don't think any of these were super A+ setups, but what's cool is the liquidity on this. Whether it's Sirius or this IWM, like none of them were home runs, but like they're all very liquid places. You can kind of put on the same concept trade and really piece together some nice hits. Then as you develop and do scale, like you can really make some massive killings on this. You know, there's nothing that stops you from one day shorting 50,000 IWMs, risking 100K, and you end up making a couple $100,000. Again, I don't think this was the most skewed best risk reward trade ever or best expected value trade, but it's a really good layup that we've seen a lot in July conceptually. So that's why I wanted to emphasize that so much. Okay, yeah, the long in IWM was good, the short in IWM was good. So now I have the semis. July 25th was what I wanted to talk about, because again, I really covered this semi move and everything pretty ad nauseum in some of those large videos I did. I do want to touch on this day, 7/25, and then keep in mind, right, I know people are going to be like, oh, why aren't you touching on this stuff? Keep in mind that was in August, so I'm going to leave that, and I already did touch on that in my other video, but I do want to touch on this 7/25. So keep in mind, in NVIDIA, these semis have been pretty strong, and then we get a weekday on 7/24. Now 7/25, it kind of has a decent capitulation, and we're gonna look at that. Now keep in mind, these had been run up a lot, right? So I want more than what this did. So this daily, it's not like wowing me. I think it's okay, but the intraday is worth, well, if trading fails, I can just do stand-up comedy with my laptop. Okay, so what's so interesting about this is NVIDIA makes a leg down off the open, we try to bounce, then we get a really aggressive roll. So it's not that this daily is so amazing. It's that it's an okay daily, it's a second down day, but we get a really nice move. But here's the thing, like this NVIDIA wasn't even that clean in here. This wasn't that clean of a bottom. I know some people that did really well on this, and I don't think it's an awful trade, but here's what I think happened. I think it was an okay-ish setup that just bounced very well, right? This is a probabilistic game, and anything can happen. Really crappy setups can have amazing outcomes, and really amazing setups can have very mediocre outcomes. And I think this was okay, but then it just bounced so amazingly well. Just so many up bars in a row. We can't pull back. Like, keep in mind though, when we have a couple down days, I don't want to go too nuts shorting this strength, just because like we did make a couple legs lower on the daily and the intraday. And when this bounces, like NVIDIA had been pretty resilient. So like, I don't honestly know if I would have played NVIDIA much. I think SMCI might have been, oh no, this wasn't clean at all. There was something that was clean. Yeah, I think like some stuff just bounces very well sometimes, like anything can happen, and like I don't kick myself for not like loving this setup. I didn't love the daily. The intraday was decent, you know, the intraday was definitely better than the daily, but it still wasn't that good because of this kind of chop around here, lack of volume capitulation. And look, it bounced super well, that's fine. I don't really want to fight some of the strength though. We're really just retracing some of that down move. We're nowhere above the upper Bollinger, so I just felt important to comment on that. And now the last thing of the video, we are going to touch on LUMN. Okay, for context, we're going to touch on this way more in August, but for now, this made I think a decently interesting move on 7-30. So really this is a fiber company that was starting to get some AI deals and everything, and everyone's like, oh my god, AI stock. So let's go to the 7-30. So this made just such a beautiful leg. Yes, it's day one and everything, but I mean this move's just amazing. What happens, we get so many up bars holding trend, we get a really high amount of volume, and then we turn. This stock is super liquid, and given the size of this move and how much this escalated, this also meets the concept of like, you know, once we kind of turn, I don't mind potentially shorting intra bar against those highs. I don't mind, not that it's so amazing, like I don't necessarily mind adding a little on break of prior bar lows, but where I think is even better is once the trend is broken and we've kind of retraced back up here, that's where you can really start to size into this, knowing that we had volume capitulation, we had price capitulation. That's where you can start to size into this against those prior bar highs and catch this leg. And so that's why like the geometry of these moves are so important, right? Like prior bar lows, this technical break, we've already retraced probably about 50% of that move to the moving average. So that's why like I'm not gonna love it. Geometry matters. But when the trend is broken and we get a chance to kind of, you know, add on this potential lower high, the geometry is, the risk is only to there and the reward is much better. So rather than having one-to-one risk reward, of course the probability matters too, right? What happens is like, I think your probabilities are still very much in favor, but the risk reward being so much better, probably, you know, being 3-to-1 or so here. And again, keep in mind guys, when I'm trading, I'm not like crunching exact numbers. I'm not doing, okay, this is, you know, 16 cents to the highs or whatever, and this is 50 cents to the lows based on that math, and a 63% probability. I'm not doing that. All I'm doing is I'm just using my eye. Like just visually, I can tell that like this distance here is probably like, I don't know, 3 to 1 of that distance. The funny part is like the eye is actually pretty damn amazing at estimating stuff. And like if we did the math, like I really think that is pretty damn close. So yeah, I'm just thinking like roughly 3 to 1 reward to down there versus the risk. We broke the trend. This was good capitulation. So yeah, I think it's a pretty favorable trade overall. And that's why though, I'd rather add more here than this, which I think is more marginal. You know, maybe I cover there. Maybe I hold big picture on this. You know, I think this is probably a pretty satisfactory cover, close to that moving average in there. That's like a solid trade. It's not so different than the serious trade either. And I think while July had some really good ops, it was good because it had a lot of similarities across those. Like I think for you all watching this video, you really just want to start documenting these and noting those little nuances and studying them even in further depth than I go into on these videos, really looking at the daily, really studying the news, really studying the volume and noticing like, look, how many bars of price acceptance did we get towards the end? We don't have these little bars like this. We don't have those little bars like on Sirius on that first day. We get increasing bar, then we get biggest bar yet. Like this is a really, really solid bar to get at the end of a move. We're above the upper Bollinger, yada, yada, yada. Those nuances matter. That is it for July. It's going to be a very busy August. So that video is going to be awesome. So thank you all for the support. Hope this was useful and appreciate everything you do.